Mortgage interest rates have skyrocketed over the last 10 things. And as a mortgage broker, I think it's a good thing. In today's video, I'm going to talk about not just my thoughts and predictions for the second half of 2023, but the Zillows, the National Association of Realtors, the Mortgage Bankers Association, all their predictions, not just what rates are going to do, but why they might do one thing or another. Stay tuned. All right, Matt Gouget, Matt the Mortgage Guy, powered by you mortgage, licensed to do mortgage in 48 beautiful states. If you want to connect me and my team, go to greatmortgagebroker.com. Mortgage interest rates, where are they? Where are they headed? It's always the $1 million question. If I were to be asked, what's the number one question you get asked? What are rates? What are rates doing? Is at the top, and then second place is way, way far behind. So in today's video, I'm going to talk about the increase in mortgage rates, where they're currently at on an average, where they're likely headed for the second half of 2023, and what you can do to take advantage of the positives that a higher mortgage interest rate environment creates. So without further ado, let's look at what's happened over the last 10 days. This is Mortgage News Daily, a source I use quite often because, quite honestly, it's a great source when you want to look at just what's the average across the country, 30-year fixed rate mortgage. And a lot of volatility is one thing you can say for certain in 2023. But you could go back to the not so distant past, 5/11 was all of a couple weeks ago, when this average was 6.49. When the average is 6.49, know that if you've got great credit, you spend a little bit to buy the rate down, you're probably locking in stuff at 5.99, 5.875, 5.75. That's certainly what my clients were doing towards the beginning of May. But over the last 10 days, you've seen a steady increase to where by the end of the week ending 5/26/2023, you got a 7.14 as an average, meaning that people with less than stellar credit, if they're not looking to spend a lot of money up front, are going to probably be mid-high sevens on a primary residence. We're not even talking about investment properties, second homes, other types of mortgages that are going to come with higher rates. Then you talk about non-QM loans or other loans, home equity lines, you start talking double-digit interest rates for some of those products. But nonetheless, this is where we're at. Let me touch on real quickly why it might be a good thing. When rates are this high and, there's affordability issues around it and other things that cause a pullback in demand, you as a buyer are going to have a lot more opportunity to find the perfect home that works for you. As an investor, opportunity means less people looking if the cost of capital, meaning the loans, are more expensive. You're going to have less competition. So I heard from a colleague a really good comment that he got from some of his buyers that, in 2020 and 21, he saw a lot of friends in really, really competitive markets settling and buying just any old house because there was 12, 15, 20 offers on every house in his market, and getting the house you wanted just wasn't possible. You had to settle for what you could get. So an advantage in today's market and a higher interest rate environment is that you might not necessarily have the interest rate you like, and the monthly payment might be a little bit uncomfortable, but you're only going to have to compete against one or two other offers, sometimes no other offers. You're able to get an offer accepted on stuff that likely wouldn't have got accepted a couple of years ago, albeit higher interest rate, higher cost of capital. So let's now talk about what we forecast for the second half of 2023. There's a lot of what ifs. There's the debt ceiling in the US. There's economic factors galore that could affect mortgage interest rates. But let's just see what some of the experts predict. Freddie Mac chief economist Sam Cater, with the rate of inflation decelerating, rates should gently decline over the course of 2023. So while this is true, I think what a lot of people are seeing, let's be honest, inflation is not decreasing at the rate that makes the Fed comfortable enough to pause or cut the Fed funds rate, which would cause, more deceleration than we're seeing. So I think it's going to be higher for longer. For people that are looking for lower interest rates, I'm sorry to tell you, but that's what I see, is that while we may top out in the low sevens and stay there for a little bit and start to see some deceleration and the rates come down with inflation, I still believe that's going to happen. It's just going to be a slower deceleration. And, we're not going to see a 5 handle until maybe 2024, right? It used to be that was going to decelerate faster. And I felt like we'd see a 5 handle, maybe even low 5s by the end of 23. I no longer see that. So National Association of Realtors are saying that mortgage rates will drop with the 30-year fixed mortgage rate progressively falling to 6% this year and then to 5.6 in 2024. That's one that I think is more accurate. And for people that want to see a 4.5% interest rate by the end of 2023, I don't see it coming. National Association of Realtors don't see it coming. It's going to be a slow and steady decrease as soon as we start to see more inflation data showing inflation coming down. Once we get past some uncertainty of the debt ceiling and all that getting sorted out, which we know it will be, right? Compass U.S. regional president, he's saying there's been signals that the mortgage interest rates may be at or near their peak, which I agree, right? Like inflation's coming down, it's just not coming down fast enough, but it will come down. Given recent encouraging news around inflation and a corresponding drop in the U.S. Treasury yields that help set mortgage rates, a sustained drop could push mortgage rates into the 5% range late in the second quarter or in the second half of 2023, but that's definitely not guaranteed. Now that's super bullish as far as mortgage interest rates go. And what we've seen is a sustained drop. We haven't seen in inflation yet. It's possible we're going to see it in the future. And, U.S. Treasury yields have actually, gone up over this last 2-week period. The spread between U.S. Treasuries and the 30-year fixed rate mortgage is really wide right now, 330 basis points or something, where it's normally 1.8 to 2%, 180 basis points to 200. And not to get into too much minutia, but once there's more stability in the Treasury market, once there's, a little less uncertainty, that spread between the 10-year Treasury and the 30-year fixed rate mortgage is going to start to shrink. And that is also going to have downward pressure on mortgage interest rates. Zillow Home Loans senior macro economist says a fight over raising the debt ceiling is likely to drag into the summer, and mortgage borrowers should expect rate volatility as a result. So that rate volatility is due to uncertainty, not knowing what's happening. Like I said, that causes that big spread between the 30-year fixed rate mortgage and the 10-year Treasury, which, if you look at 7.14 as an average here, and the 10-year Treasury, I think, is probably like at 10.8 or something, 333 basis points, 150 basis points above what it normally is. So less volatility, that's going to shrink. Downward pressure on mortgage rates. All right, Mortgage Bankers Association, long-term rates have already peaked. We expect that 30-year mortgage rates will end 2023 at 5.2. Again, too bullish for me. Like, I'm all for inflation's coming down, volatility is coming down, mortgage rates are coming down. I don't think they're coming down that fast. 2% between now and the end of the year, that would be wild. We can't afford to them to come down right now with little to no inventory and already, a good amount of demand. But, come Q3, Q4, maybe we get sub 6% and that'll be a healthy thing. All right. Last but not least, Rinaldi Group president rates will begin to slide into the summer, beginning a slow but relatively steady lowering of interest rates. Everybody seems to agree we're at or near the peak. Mortgage interest rates will slowly come down. I'd love to hear from you in the comments. What do you think the mortgage interest rate average on a 30-year fixed rate mortgage is at the end of 2023? Do you think that it's, check this out. I put a note here because I thought it was crazy. I don't know where I read it on Google, but experts polled expect average 30-year mortgage rates to land anywhere between 5% and 9.31 in 2023. Who the heck thinks it's 9.31? Maybe it's you. Let me know in the comments if you think that mortgage interest rates could go into the nines in 2023. That would be a wild time. Then all the Crash Brothers would definitely have some fuel for a serious pullback in real estate if we got rates up into the nines. So what's your prediction? Leave it in the comments. End of 2023. Where do we end? 5.5%, 6%, 6.5%, 9.31. I'd love to hear from you. Thanks for watching.